All right, get ready to dive deep because today we're tackling diversified portfolios with a little help from Margin World. Picture this. You're building a financial fortress that can withstand any market storm, and that's where diversification comes in.
Yeah, exactly. It's about strategically spreading those investments so
hmm
you're not banking on just one single thing, especially with how wild the market can be these
It's
days.
like that saying, right? Don't put all your eggs in one basket. More like, let's get a bunch of baskets, spread those eggs out, and maybe even toss in some bubble wrap for good measure.
Now you're getting it. Margin World breaks it down simply. Diversification is all about reducing risk. They even compare it to not putting all your money on a single horse race, which makes a lot of sense.
Makes total sense to me. So instead of one horse, you're betting on a whole field, different races, maybe even different tracks. I see how spreading that risk could lead to smoother returns over time.
Exactly. If one part of your portfolio stumbles, another might be hitting its stride, softening the blow. That kind of safety net is crucial, especially with how the market's been acting lately.
Like having a financial cushion, which I think we all could use a little more of these days. So Margin World, they've got this whole toolkit for building this fortress, right? What's the first tool we're pulling out?
Asset allocation, figuring out what portion goes to stocks, bonds, real estate, you name it.
Striking that balance, they mention this rule of thumb, subtracting your age from 100 to figure out how much goes into stocks. That's not like a one-size-fits-all thing, is it?
Definitely not. It's a starting point, but you have to factor in how much risk you're comfortable with, your time frame, what you're even investing for. Someone saving for a house in a few years is in a totally different boat than someone with decades to go until retirement.
Right. Wouldn't want your investments to take a nosedive right when you need that down payment. So we figured out how much to put in each bucket. What's next?
Time to get specific within stocks, which is where sector diversification comes in. Stocks are great, but just like those eggs, you don't want them all in the same industry basket.
Uh-huh. So even within an asset class, you're diversifying. Give me an example. How do you play that sector game?
They highlight the difference between, say, tech stocks versus something like consumer staples. Tech can boom, but it's also vulnerable when the economy gets shaky.
Right, because while that new gadget is tempting, people always need basics like food and toothpaste, no matter what's happening in the economy. Those consumer staples tend to be more reliable, right?
Exactly. By mixing up the sectors, you're better prepared for whatever the market throws your way. But why stop at just different industries?
You're right, there's a whole world outside the US market. Is that where geographic diversification comes into play? Tell me more about looking internationally.
Think of it like trying fruits from all over the world, not just sticking to apples. Places like Southeast Asia, those emerging markets, they often have huge growth potential.
Are there specific risks that come with investing internationally?
Oh, absolutely.
Yeah.
It's not as simple as just jumping in. Things like currency going up and down, even political stuff, can really impact your returns.
It sounds like venturing into these international markets needs some serious homework.
You've got to weigh the potential payoff against those risks.
Yeah.
But yeah, going global adds another layer of, hopefully, resilience to your portfolio.
Okay. So we've got our asset types, sectors within those, and now we're thinking geographically. This diversification strategy is really coming together. What other tricks does Margin World have up their sleeve?
Well, ever thought about going beyond the typical stocks and bonds? Let's talk alternative investments.
Ooh, alternative investments. Okay. I like where this is going, thinking outside the box. What does Margin World have in mind? All right, so we're back, and I'm really curious to dig into these alternative investments with Margin World as our guide. Feels like we're heading into uncharted territory, which I always love. Where do we even begin?
Well, Margin World, they zero in on real estate as a really strong alternative asset. More specifically, they get into REITs, those real estate investment trusts.
REITs, right. Those are about investing in real estate without actually, buying properties,
Yeah,
right?
exactly. They let you put money into real estate that actually generates income. Think apartment complexes, shopping centers, office buildings. You own a tiny piece of a lot of different properties without the headaches of being a landlord.
Interesting. So instead of putting all my eggs in one rental property basket with REITs, I could spread that investment across a whole bunch of properties, diversify that risk. I like that.
And just like with other assets, you can get even more diversified within real estate. There are all kinds of REITs focusing on different things. Some are all about those apartment buildings, others might be in shopping malls, even healthcare facilities or data centers.
Wow. Okay. It's like this whole secret level of diversification strategies. But what I'm realizing is building this portfolio isn't a set it and forget it kind of thing, right?
You're absolutely right. Margin World compares it more to tending a garden. They have a whole pro tip section, and first up is rebalancing.
Rebalancing sounds like a financial tune-up.
That's the idea.
Yeah.
Your investments, they're going to perform differently over time. That initial mix you set up, it can drift. So rebalancing means selling a bit of what's doing really well and putting those gains into things that might have lagged behind, getting everything back in order.
So it's about recognizing when an investment is maybe getting ahead of itself, taking some profits, and then being smart about where you put those to keep things balanced. That makes sense, but it seems like it takes discipline.
Discipline is key. Rebalancing means sticking to your long-term plan, not getting distracted by quick wins or freaking out over every little market dip.
It reminds me of another pro tip they mentioned, dollar cost averaging. Is that another one where discipline is key?
Absolutely. Consistency is the name of the game with dollar cost averaging. Yeah. Instead of trying to time the market perfectly, you invest a set amount on a regular schedule, maybe monthly, regardless of what the market's doing.
So some months that same amount buys you more shares if prices are down. Other months, fewer shares when prices are up. It's about taking the emotion out of it, right?
Exactly. You're not putting pressure on yourself to perfectly predict every market move, which, let's be honest, is pretty much impossible to do consistently.
That sounds like a really good strategy for someone who might get overwhelmed by the market's constant ups and downs.
It can be a great way to ignore the noise and just focus on the long game.
Speaking of bringing some calm to the investing world, Margin World also touches on index funds and ETFs.
Those are like the all-star team of the investment world. Index funds and ETFs give you instant diversification. Think of them like baskets of stocks or bonds that follow a particular market index.
So instead of me spending hours researching individual stocks, I could put money into an index fund that tracks, say, the S&P 500 and instantly have a piece of all those companies.
Exactly. It's a low-cost, relatively hands-off way to get broad market exposure and build that diversified portfolio.
I'm seeing a theme here. Margin World is all about giving investors different tools, recognizing there's no single right way to do things.
Absolutely. To truly make your investment strategy your own, there's one more thing Margin World says is crucial.
Okay, we've gone from asset allocation to alternative investments and all those portfolio tune-up tips in between. What else is there? We're back, and we've covered a ton. Asset allocation, alternative investments, even those pro tips for keeping your portfolio in tip-top shape. Feels like we're laying some serious groundwork for a diversified portfolio. But you were saying there's one more crucial thing to consider.
We've talked strategy, but investing well, it also means knowing yourself. Margin World really drives home this idea of understanding your risk tolerance.
Okay, risk tolerance. It's come up a few times this episode, but how do you actually figure that out? It feels kind of, I don't know, abstract.
It's personal, that's for sure. Margin World has some good questions to ask yourself. Your financial picture right now, your goals, even your personality plays a role.
So like someone who's got a big emergency fund, they might feel differently about risk compared to someone who's just starting to save.
Exactly. And then there's how long you have until you need that money. Are you investing for a down payment in a few years, or are we talking retirement, decades down the line? Someone with a longer time frame, they might be okay riding out some ups and downs.
Right. If you need the money soon, market swings can be pretty stressful, different ballgame altogether. But you also mentioned personality. How does that factor into risk?
Well, some people love roller coasters. Others prefer a scenic train ride. Some people thrive on those market swings. Others, not so much. There's no right or wrong, but you got to know your own comfort zone.
So it's about matching your investment strategy, not just to your financial goals, but also to you, your personality. It shouldn't keep you up at night.
Exactly. Margin World is big on this idea that investing isn't about chasing the absolute highest returns no matter what. It's about finding that balance.
Yeah.
Growth potential and peace of mind.
This has been such an eye-opening conversation. Margin World has given us so much to consider. We talked about the nuts and bolts of a diversified portfolio and these bigger picture ideas about risk and personal goals.
And that's the beauty of diversification. It gives you options. You can tweak your asset mix, try different sectors, even dip your toes into those alternative investments, all while staying true to your own risk profile.
It's like you get to build a strategy that actually reflects you, your individual needs and goals. No two portfolios will look exactly alike.
That's right. And as you start putting all this into practice, remember, knowledge is power. The more you understand, the more confident you'll be on your investing journey.
Couldn't agree more. So, to everyone listening, as you start building your own investment plan, think about those financial goals that truly matter to you. What are you working towards? And how can a diversified portfolio built just for you give you the foundation you need to get there?
Thanks for joining us on this deep dive into diversification. We hope you found it insightful and hopefully empowering.
Until next time, happy investing.